the most complicated part when we talk about international business, especially if we have different offices in, all over the world. And it depends on, whether or not where we are based. So we will have to follow different accounting rules and then the finance decision. So for the financial management, that involves the investment decision, what do we invest? And then financing, how are we going to get money to support the decision? And then the money management, how do we allocate our money more efficiently? Okay, and as we discussed throughout the semester, in some countries like US is pretty free. Okay, we can usually transfer in and out money, whatever we want, but if it's something, a big amount, it might be monitored by IRS. So it's all that's the only sort of like restriction, but they don't really restrict how much you can while out or while in, yeah. But in a lot of other countries, they do have some kind of restriction, and they monitor the international transfer, the monetary transfer closely. So when we are doing international business, we have to also kind of think about that, like how are we going to invest the money we make in certain countries if we cannot get it out, okay? And then accounting, I think you guys know accounting is the language of businesses. So it's how companies communicate their performance with people, with different, stakeholders. For international company, it's more complicated because we have different rules. I don't know if you guys, how many of you took international accounting? No? No, huh? International, like financial institute, international management. This class. This is international management. It's this class. Okay. So yeah. So, but if you happen to, I don't know, how many people took or is taking class with Ina, Professor Ina? So he has CPA from UK, Canada, and then US. So he has knowledge in different accounting systems. So if you are curious, or we can ask him. Yeah. So because accounting is with different accounting standard, we will prepare different financial statement, right? Prepare financial statement, and in different countries, because the financial statement is for people to view, right? To see the company's performance. So there are sometimes, different standards, how we prepare the accounting statement, or the financial statement for the auditing purpose. So there are different some differences. Okay, and but I know, because US companies, US corporations are very strong, very powerful. So a lot of US companies, when they have overseas office, they will hire CPA that actually pass CPA in US, and then also have CPA in the local country. Okay, so I know some big companies that they like to, like I have a friend, she got her CPA here in US, but then when she went back to Taiwan, she also got the CPA in Taiwan. And then the company love to hire her. So she get to travel a lot, like she get to train different locations of people. So because eventually, I think even for international businesses, their ultimate goal is to be listed in the US stock market. So they want to be a public company in US. Yeah, they want their stock to be traded in US. So that's why it's important to have someone that knows the US accounting standard. But there are several variables that will affect the company's accounting system. Okay, the relationship with the between business and provider of capital, we'll talk about it. And then sometimes the political economic ties with other countries, like the former British colonies, they will more likely follow the UK law, UK accounting standard. And UK, I think, has similar standard as US. And then maybe former German colonies, they would do, they'll follow different standards. So, and then the level of inflation, the country's economic development, and the culture in the country. So, the accounting system, they usually affect where do we get the money. Okay, so for US and UK, our system, they prepare the financial statement mainly for the individual investor, like general public. Like we invest in stock market, right? And UK as well. So they prepare financial statement for the general public. But in Switzerland, Germany, they will focus on providing information to banks. Okay, the banks has the money, they provide the capital. So like this time, the Credit Suisse, whatever happened, the UBS, they want to buy Credit Suisse, and you can see that they actually have more power. One of the deal they made for them to agree to acquire Credit Suisse was to forget all the loans that they had, which is unheard of, right? Like usually, if a company files bankruptcy, whatever they owe money to, the lender always get the first equity, first cut, and then it's the investor, because investors are part of the company. So that just means they invest wrong. They invest in this company that's their own mistake. So they take the risk. But for the Credit Suisse case that we learn, oh well, okay, so obviously the bank is more powerful than the lender that they owe money to. So it's just a little bit different. Yeah. And so like another similarities in the connections, political and economic ties, like US has been US have very strong military tie with the Philippines. They have a lot of military, I think Navy, I don't know if Army is there, but Air Force, so they have different base, like they have several bases in the Philippines. And then EU, so they are trying to, all the countries in EU, they are working towards the common standard. And the UK, they will be, these systems are used by the former colonies, like Australia, Japan, even Hong Kong, I think it's different. Yeah. So, and then the developed country, they tend to have more sophisticated accounting system, like, in US, so difficult to buy our tax, right? Even when we have TurboTax, all those online service, still complicated, right? They ask you a question, you're like, okay, what does this mean? When you answer, it just keep getting the error message. So, it's difficult because when the company is more developed, the economy is more developed, business can learn to avoid tax, right? They try to do I try to, do my best to minimize my tax payment, okay? So I think it's human nature. I don't know if you guys, are you really happy to pay tax? Or if there's a way you can lower your tax, will you do it? So, or you think it's too much to worry about that. Let me just pay whatever I need to pay. Guys, no,
Pretty much stated,
just pay it. When you make enough, you will know it hurts when you need to pay a lot of tax. So you try to lower the tax. Yeah. So yeah, so I think it's human nature, but because of that, so the IRS, also set up different standards, different ways to make sure you don't hide your money, you don't escape whatever you need to pay. Yeah. So I have a friend, she just moved here to US and she had some money saved in Taiwan. And then there's some, I don't know the English term, but they asked whoever, over the American need to report their overseas property. Yeah. So she's like, oh, this is so like complicated. So, and she doesn't have a lot. She only have maybe a few $1,000s saved in Taiwan. But she's worried. She said if you got caught, then you pay 10 times whatever you owe, yeah. So she doesn't want to do that. So she's reporting this. She's like, this is so complicated. And yeah. So that's a developed country. For the developing country, they usually are a lot of times from the colonized, they call colonial countries. Okay, like Taiwan used to be a colony of Japan. And so we kind of follow the Japanese standard. And I don't so do you guys remember in your management 211 financial accounting, you need to do the balance, you need to balance your book, right? So if you couldn't balance, what happened? What did the professor say? Like if your debit credit is not balanced, what do they say? Like if it's 1 cent off.
I haven't taken that class in years.
Were you guys trained to do the entry to make sure debit and credit are always the same? There's nothing off. Yeah. So if it's not, what?
I usually just, the only thing I remember is that just redid the question and see if I came with.
Okay. Okay. So I remember when I first came here for MBA in the accounting class, the professor say, if it's not balanced, what do we do? And we're like, you have to balance. He's like, no, just write it off. They say the time you wasted in that is more than 1 cent. If it's like certain amount, you just write it off. But when I learned that, we have to do, I remember we were given like this huge paper to do the T, is it called T large? T larger or whatever, like you have to do everything manually. And then you have to make sure both sides are equal. If not, you have to recalculate everything. So if you did something that's not balanced, you basically fail the class. Yeah, so it would take us long time. Like if there's a tiny mistake, you have to go find it and fix it. So given these, and we have to do like the journal entry. So we have to start from journal entry and then using whatever they gave us and then make financial statement. So you have to do the journal entry first, and then you can draft your financial statement, but you have to make sure everything is balanced. Yeah. So it's different. It's different. What we inherited from Japan is, Japanese are very serious. Like they don't really allow any mistake. But in US it's different. You look at the more practical. Like the time you always, like my professor said, the time you wasted in finding that 1 cent, it's not worth it. But in Japanese defense, it's if you made a mistake, there's a mistake. How do you know today's 1 cent would know if tomorrow be $1 million or something? Yeah. So that's different culture. And then there are different standards. when we prepare the statement, okay, the auditing standards, they have different rules, how we perform the audit. And before the annual, we have a little bit looser standard, and now it's stricter. Okay, but I know audit. Are you accounting major? Anybody? Did you take audit? Is it fun or boring? So that's what I heard from accounting people. They say audit is boring, but that's basically what you do every year. Yeah. So if you like the rapidity, you don't like uncertainty, then you will like doing an audit because it's something like you do every year. Yeah. So why are the international accounting standards important? Because we know we do business with different countries, so it's important to follow the rules in different countries. Okay, and also we want to have certain consistency across borders. So now people like the institutes are trying to work to standardize the accounting standard, okay, across national borders. So we have the IASB, that's the International Accounting Standard Board. It's a little bit different than the US. US is the federal, the best, and this is the ICE. Yeah. So it's a little bit different, but they try to come out with some consensus. So there are more similarity now than the differences. Okay, but they are still tiny difference. And when you take accounting class, you always need to get the latest book, because different rules might change every year. So and then the accounting, how does that affect the control system? So when we talk about the control system, like we have to kind of oversee our performance, right? But if we have businesses all over the world, and we will have different exchange rate. So when we set the budget, we have a rate, and when we set the budget, we will have a projected rate for whatever for the transaction, maybe when they happen, this will be our projected rate. We think the exchange rate might go up or go down. And then when the transaction actually happen, we have the actual rate. Okay, so different countries also have different standard on that. Okay, what kind of rate can we use? Can we just change to favor to make our statement look better? We can, but there are some rules we have to follow. So this comes with this what I just mentioned, the budget and the performance data. Okay, so normally we have to use the home currency, but exchange rate, how do we calculate exchange rate? There are some rules we have to follow. Okay, so this Lesser-Lagrange model is there are several ways we can deal with the exchange rate. So we have the initial rate. So when the budget is made, okay, it's adopted, and then the projected rate is the spot rate forecast. So the forecast when whatever the transaction will happen, okay, and then the ending rate is when the performance are being compared, the real exchange rate. Okay, so the model here is, so when we have we use the rate we use to translate the actual performance compare. So this is the rate we use, and this is the rate for budget. Okay, so this is the rate when the performance, like the end of the year, when we try to look at how much we spend for our budget. like it's a real, it become the cost. But before the cost, we have the budget, okay? So we have to, kind of think about, so whatever is rate is not allowed. So that means if we make the budget at the initial rate, when the budget, let's say when we made a budget in July, on July 1st, and we use the rate on July 1st, then we can, when the end, toward the end of the budget, we can also use the initial rate. Okay, so if we use the initial rate and the budget, then we can also use the actual performance at the initial rate. Okay, but if we use the initial rate and the budget at initial rate, then we cannot change this to the projected rate. Okay, but we can actually use the budget at the initial rate and then the actual performance at the ending rate when the actual performance happened. So and then when we use the budget at the projected rate, we cannot go back. We cannot say we use the budget as the projected rate, and then want to use the actual performance at the initial rate. We cannot do that. We cannot use the rate on July 1st. So we have to use the projected rate. Okay, and we cannot also use the actual rate as projected when we use the ending rate for budget. So when we use the ending rate for the actual performance, then we can use the budget, we can use initial rate, use projected rate, and we can use ending rate. So it can only go forward, it cannot go backward. Okay. Cannot just change like, oh, well, the budget rate is going up, so our budget will be bigger, and then the actual rate at initial, so we actually spend less than the budget. We didn't overspend, so we cannot, we cannot do that. And then the subsidiaries and the managerial performance. So sometimes I think we kind of talk about it when we talk about international HR. So to evaluate the subsidiary, we want to be kind of separate from evaluating the manager, and we should consider the country's environment and for the business. Some countries might be difficult, right? Some countries might be easier, or the economy condition for the countries will be also different. So we have to also take those into account. And we also want to make some kind of allowance for those things that the manager have no control. Okay, so we just, when we manage global business, we have to be a little bit more understanding. The decision will be more complicated because we need to think about the currency exchange rate and different tax system, tax region, and sometimes different countries, between different countries, they have different tax treaty. Okay, so that's all something that we have to consider. And then, like I mentioned, there are some regulation on capital flows, how much you can wire out or you can get. Okay. And then different economic, political risks. Speaking of that, my mom told me there are some countries, like I think she said India and then some African countries that they call their resident in Taiwan out, like they not expected. How do you say, like they estimated that there might be an attack on China, on Taiwan. So some countries are calling their citizens to leave Taiwan. So they Therefore, yeah, and then we know, last week when the Warren Buffett they have this meeting. So he disclosed why he bought Taiwan Semiconductor. See, maybe in January or in December, and then he sold it after 1 or 2 months. Usually he doesn't do that. Usually he holds the stock for a long time, but this time he sold it right away. So this time, just a few days ago, he finally disclosed why. He said he's worried about the geopolitical tension between Taiwan and China. So it seems like there were rumors. Yeah, there were rumors about China is going to attack Taiwan soon. And I also saw the news that there are more US military moving to the Philippines, because the Philippines is very close to Taiwan. Like from the southern tip of Taiwan, we can actually see the Philippines. Yeah, like there's a national park. So there's a national park here. Oh, this is Taipei. This is not really upside down. They just write it upside down. It's not really upside down. Yeah, they just wrote it upside down. Oh my God, I just realized that. So from southern tip, we can see here. Yeah, this is Philippines, this is Taiwan. So the US, the fifth fleet is here. Yeah. So so this, when we talk about investment, it's more complicated because there are so many factors we have to consider. So how do managers make investment decisions? So like we say, I don't know if you guys remember what you did for your 301, but financial management. So you probably do the capital budgeting, and you probably do the net present value analysis. You guys remember that?
No, but I remember that class. I'm sure I took it last year.
Really? Yeah, but do you remember the net present value? Like you calculate the cash inflow, outflow for the next 10 years, and then discounted the cash back to the present to see whether or not this project is worth it. So to do this in the international setting is even more complicated. Like I mentioned, you have to consider the political risk, economic risk, the inflation, different inflation rate in different countries, and then also the exchange rate fluctuation. Okay, I took international finance in MBA. It was so difficult. So we have to make this huge Excel chart that putting all the risk into the consideration and calculate the net present value. So the net present value of the discounted cash flow is greater than 0, then we should go ahead with the project. But we need to, like I mentioned, we need to include all the risks we just talked about in the project. So that's how the manager make investment decision in international company. And in capital budgeting, like we mentioned, it's more complicated because we have to calculate the cash flow to the project, cash flow to the parent company. Sometimes you also need to consider the political economic risk, and then sometimes there might be, like we mentioned, there might be restrictions on the cash flows from in and out of the country. So those are the things that make things more complicated for international business. So sometimes, like we mentioned, let's say the China side make a lot of money, right? But they only allowed $50,000 to be wild out. So how are we going to get the money if we are like, if I start a company in China, I make $100,000 every year, but I can only get $50,000, and then the rest of it I have to invest in China. But the political tension between China and US is, kind of bad. I don't want to keep investing. I just want to keep it the same size. I don't want to grow it too much. I want to move to some other places. I can't because, I can only wire our money this much. Yeah. But that's, legal. So when I worked in China, what we did was we just exchange cash with different companies, like our suppliers. Like we say, oh, we have RMB, the China money of RMB. Can we get some US dollars or can we get something else? So and a lot of times like some companies, they have international business, so they receive payment in US dollars, and then just kind of exchange money on the table. So those are the things that you have to consider, and when you make the decision on investing in different places. So political risk. Now we have more. It seems like we have more geopolitical tension around the world. So this I think become more serious nowadays. 10 years ago, it seems like everything was fine, but now, countries started to get nasty. Like another country, they used to, how should I say, be respectful to US, but now they would, like last time, I remember China was criticizing, I forgot what China say about, like Biden say something to their president saying, oh, you need to improve your human rights stuff or something, and then China say something like, you see how many homeless you have, or your drug issue or gun violence, so they attack US back. It never happened before, right? It never happened like that before. Like they don't really attack US in that way, yeah. So now it become more intense, and even what happened? Oh, Saudi Arabia. So Saudi Arabia, they have is not having good relationship with US now, and China just went and they even what did they do?
They're trying to get rid of the US dollar to be the international currency.
And then China even tried to talk to hold a peace talk between Ukraine and Russia. Remember that? So the president visited Russia, and then after that he visited Ukraine, and then he's like, oh, we are willing to host the peace talk between these two countries. And then they kind of attacked like US and the European country. They actually accelerate the war. So yeah, so I thought that's interesting. But now everything become more above the water, like it's not hidden anymore. And the economic risk. So just a few months ago, UK had they made a really bad decision on their what is the name? No, that was several years ago, but just a few months ago, last year, towards the end of last year. Remember one time the British pound, they depreciate to the same level as US dollar. Usually it's 1.5 to 1. And then it become 1.2, and then it dropped to $1 to 1 British pound just for a few days. Yeah, I was ready to travel to UK for that, but I was too late. But it was when they had this prime minister, she resigned after 44 days. That's why she resigned, because their central bank say they are going to tighten the economy, but then their treasurer, how do you call that? The Secretary of Treasury, Treasury Secretary, yeah, announced that they are going to give subsidies to to people. So it's like conflicting with their policy. So, so the market collapsed because they were like, what are they doing? Do they know what they are doing? So they had questions about the government. And then it just kind of crashed. They thought their retirement is going to, the retirement fund is going to go bankrupt because they, yeah. So, so when we analyze the foreign investment opportunity, like I say, we could raise the discount rate when we have higher risk, okay, or higher possible inflation, and we can lower the rate when the economy or political change was smaller. So we use the rate because when the rate is higher, when we discount the cash flow back, it will be smaller. So it will make it less valuable. So that's why we do that. And how do they make financing decisions? So how the foreign investment should be financed? So it depends on the cost. In different countries now, they have different interest rate. Japan still have 0% interest rate, okay? And US, what's our interest? Almost 4 point something percent, almost 5%. Okay, so there are different in cost of capital. Okay, so we will have to see how we where do we want to finance, and then also I'll give you one example later on. So sometimes for different tax bracket. So when you have higher tax, you have to pay higher tax. It's better to have more debt because the interest expense can kind of offset your tax, right? It would lower your profit, right? Your interest expenses. So, and then depends on the debt and equity. How do we do that? Money management. So we want to minimize cash balances. So it depends on where our money is, and then whether or not this place has unlimited liquidity or whether it has low liquidity. So it just depends. And then we want to reduce the transaction cost. A lot of banks, they charge transfer fee, but if you are big enough, they will waive your transfer. Yeah. So sometimes the multinational companies, they have the multilateral netting. So they will have different subsidiaries where they put their money in and then they can transfer between there. So, and then different countries have their own policy, and we have the thing called double taxation, or we have to pay tax twice. A lot of times, like for companies, it might not be easy to avoid, but for personal income tax, if I earn anything overseas and I got charged tax, I can file it on my US tax refund, right? And can use the tax credit. Different countries, they might have different tax credit, tax treaties between countries, deferral principle, and tax haven. But unfortunately, this is tax haven are the practice I know a lot, because I know a lot of Chinese, Asian companies. We all have our headquarters set in the tax haven where there's no tax, like Luxembourg, no tax. What is Delaware, no tax, no corporate tax. Yeah, so a lot of company actually based in Delaware. And then where's another place? US Virgin Island. So because they don't charge tax. Bahamas or Panama, they all they don't charge corporate tax. So so I still don't understand why IRS can go after those companies that's based in the tax haven, but they do. Like now, if it's a US, let's say Apple, they say their headquarters in Luxembourg, they will still be chased to pay the tax they make, considering that they are actually US company, but even though they move their headquarters to Luxembourg. Yeah, so that's the part I don't understand, because it's, you know, when I work in companies, that's what we do. Everybody I know, that all the supplier, all the competitors, we all set our headquarters in the tax haven, so we don't have to pay that much tax. Yeah, but now, you know, you need to be careful. Yeah. So the companies, they can transfer their money through border using different ways. Like I told you guys, the dividend remittance, sometimes they would restrict that amount, like you can only wire out how much of your profit, you cannot, you know, wire it all out. But we can use different ways, like we can pay royalty to the headquarters, to the mother company. Is it called mother company? Like the host? No, host company? No, home company, the home company. Okay, so we can use it as like that, like we charge them fees instead of, you know, getting profit from the host company. And then we can use transfer price. Okay, so we can, it depends on how the tax works. Okay, and then we can do fronting loans. We can say we loan money to the home office. Okay, so it's not a dividend remittance. And another reason companies don't like to pay dividend is because sometimes we charge higher rate, okay, like dividend, and then sometimes in the different countries it might not, you know, it might not work. So we prefer. So this is just one way, but you know, we sometimes use some other ways like royalties, to pay royalty to the home company, so that we can, like the host company pay royalty, so they have expenses, so they don't have to pay that much tax for the profit. Okay, and then they are not restricted by, you know, how much money you can wipe out, because it's not the profit, it's the expenses you have to pay. So the fee is just something that, you know, we have to pay. So it's tax deductible. And the transfer price, we it depends on where, like if we work in different countries. So we want to shift earnings from the high tax countries to low tax countries. So for example, if China's corporate tax is 10% and US is 35%. So when we ship stuff from our companies in China to US to the home company, we will use higher cost in China. So they will make money, they will make more money, but our cost for the US will be higher. So we make fewer profit, and then we pay less tax because the tax rate here is higher. And then we pay more tax in China because the tax is 10%. So it's just, you know, just one example. It could be the other way around. Okay. So we just want to, you know, minimize the tax, but sometimes is we want to move the fund out of the country where, you know, the currency devaluation is expected. So if we feel that, like if we make a lot of, let's say 2 million RMB, and we know the 2 million, like now the 2 million, I just made up the number. Now the 2 million is worth 400,000 US dollars. But if it's depreciating, we know our 400 US dollars will be 200 US dollars. So we want to move the money out now to convert it to US dollars, so that, you know, we don't lose the money. Okay. So, different ways, we use, but it could be problematic because government feel like it's similar to the tax haven. This was very popular when I first got my MBA, which was 20 years ago. So everybody, all the major CPA firms, they are hiring people that know something about transfer pricing because they are doing that for all the international companies. And now it become problematic because they feel like they are cheated by the companies through different, different subsidiaries. So, we have to be very careful. And also, because if we change the pricing because of the tax issue, because the reason that we talked about previously, then sometimes it will complicate the incentives. So let's say US tax is higher, so we purposely try to make it look like we make less money here. But then actually we are making good money, but we just move the revenue to our source because their tax is lower. So how will the manager, how are they going to evaluate their performance based on the profit or based on the sales? Because then it will not be fair for them because we want to avoid the tax here. Okay, so it will complicate the incentives and the performance evaluation. And then last thing is to front loans. So we can, instead of receiving the profit, the dividend, we actually use the loan. Okay, so we use fronting loans to gain tax advantage. So like here, okay, one example. So we have a tax haven subsidiary, and then we have also foreign operating subsidiary. And from the tax haven subsidiaries, they will deposit $1 million to a bank. Okay, this is in London. And then we just, because it's the money we put it in there, and then this company, the foreign subsidiary, they will get a loan for $1 million. Okay, and even though they pay 9% tax interest, but the interest expense is tax deductible. Okay, and then this company, they will get 8% interest from the London bank, but it's tax haven, so they don't have to pay tax. So even though they pay 1% interest, the difference is like 1% here, but they actually get tax deductible, so it's much less than they're actually gaining. Let's say if the tax they pay here is 35%, then it will be they actually pay 9% times 65%, right? Because we got deducted 35% of the tax, so they actually pay 65% of 9%, which is 9 times 65, so 5.85. They only pay 5.85%. So it's only 5.85 times 1 million.
Right.
58, about $58,000. So they pay $58,000 for interest, and then they gain $80,000 interest. So they actually make money. They don't have to pay, the money they make they don't have to pay tax. Okay? That's why rich gets richer, because they have all these tools they can use. Any questions? Okay.
It's good for the original four states.
Yeah, like me, like I couldn't even get a $300 first class ticket because my internet sucked. So too slow. Oh. Then did you stop recording?